All right, hello and welcome to Camel Finance. I'm your boy Camel, and things can change and they can change quickly, and we are seeing them change quite quickly. Of course, we had the CPI data come out yesterday, and it was a cold print, meaning it was below forecast across the board. A quick note about Trueflation. I use Trueflation all the time, as I'm sure you know if you've been there before, but I noticed something yesterday for the first time, so I thought I would share this with you. No one's ever pulled me up on it either, even though I use this metric all the time. So I wonder if you haven't noticed either. The reason this 2.4% is always significantly below the government reported rate is because this 2.4% is actually at this very moment in time. This is today's Trueflation readout for this very day right here, where of course the US government reported rate is lagging because it's the month prior on a year-over-year basis. So it makes sense that this is always a little bit ambitious, but overall it hasn't really mattered because I have been using this as a trend. The thing I want to know about is what is the inflation trend, and as it has been coming down, as you can see here, that has enabled me to position in the markets according to a downtrend in inflation and how markets typically respond to that. But nevertheless, a little detail that I had missed there, so I thought I'd pull myself up and let you know about that. So in summary, CPI at 3% below the 3.1 forecast. Core CPI is now below 5% for the first time since December of 2021. So it seems like this 26-month battle against inflation may finally be nearing its end. But I just want to quickly use this time to draw my little pendulum. Remember, when we go from a highly inflationary environment to a deflation, this pendulum swings from one side to the other. So right now we're in this Goldilocks zone. Remember, things don't look so bad. There's talk of no landing and swerving a recession and nearing the end of the rate hikes. There's also talk of inflation coming down. But remember, once a pendulum is set in motion, it doesn't just stop here and then chill. It continues to swing to the other side. And that is why I still champion this idea of a deflationary bust in the not too distant future. I do think this is possibly several months away at least, maybe even into the end of this year or early next year. But make no mistake about it, my base case is still that we will have this melt up to all-time highs. And once we get there, we will have a deflationary bust and a big rollover. As of yesterday, the S&P closed 3% higher than where it was when the Fed started to hike rates back in March of last year. So this whole narrative of don't fight the Fed and all of that, all those people were completely wrong. And I have to be honest here, I got this massively wrong. I was calling for a Fed pivot around September time, September, October. I said, once we get into this neighborhood, things are going to start to break. I said, I was sure that they're going to have to pivot and they're not going to be able to just continue to hike rates. Now, in my defense, this was the most aggressive, fastest rate hiking cycle the world has ever seen. So how was I supposed to know? But at the same time, it's important to point out that in trading, you get things wrong all the time. And it doesn't matter if you're right or wrong. What matters is if you're on the right side of the market. And that is, of course, why technical analysis is so important. Because even though I was completely wrong about this, calling for a pivot all the way through this neighborhood here, the charts are the truth. The price is all that matters because price is the truth. And I was therefore able to stay on the right side of the market by respecting trendline breakouts and higher highs and higher lows that form an uptrend. But with all that said, the facts are the facts, and I did get this massively wrong. This is probably going to become the recurring theme for the next few weeks from me, unfortunately. Now, of course, it's nice for me to just tell you, oh, we're going straight to all-time highs, of course, melt up, blow off top. All of that sounds really nice, right? It's really easy when markets are in up-only mode. And of course, that's what I prefer as well. But we are right in the timing band. This was posted last week. So you can see maybe this week, maybe one more candle next week, even the one after that. And then it is time to start to roll over into this weekly cycle low, just like we did here, just like we did here. So this is still the base case for me in the short term. Now, let's make sure we're really clear. I think what we do is we come down into a weekly cycle low, make a swing, and then I think we have the full final blow off top portion of this rally to new all-time highs. That is how I see it. Now, of course, we have to be open to seeing a much higher number and then a decline into a weekly cycle low, which forms much higher up than the one that is noted down here. The cycle low, remember, does not predict price levels. It simply predicts a timing window, plus or minus a few weeks. So we know that we're getting close. I'll show you all of my positions as always. And remember, whilst I have been one of the biggest bulls in the entire space ever since the lows, in fact, ever since this set, back here in the summer of last year, when I first proposed this idea that we would do one of these and a big blow off top. Markets do not move in straight lines, remember, and therefore we have to respect this cycle, at least I do. So I'm proceeding with caution. That doesn't mean we haven't got longs, that doesn't mean we won't continue to push trades, but it does mean that the cycles provide contextual awareness, and given where the cycles are, it is reasonable to expect some level of cooling off in the not too distant future. But of course, like I keep saying, once we get here, I do believe it's time to go and crack the all-time highs. Over in the world of Bitcoin, Bitcoin has made another new all-time high against the Argentinian peso. So why do I keep pointing this out? Because this is coming to a currency pair near you. I'm sure of that. I'm absolutely sure of that every single Bitcoin currency pair is going to look like this before too much longer. Some evidence for this, as far as I can tell, is, remember, this network, the most powerful computer network in the world, which is of course Bitcoin, is more than doubling in size every 12 months. This is nothing short of incredible. This speaks to massive demand, massive infrastructure build out, massive capital expense and investment into this protocol. And all of this with a hard cap supply of 21 million. Of course, the real number, much more like 17 million, because we've lost 3 forever, and 1 million is Satoshi has kind of gotten rid of, right? He's not going to be able to do that without revealing it. So there's only around 17 million. But if we use the full 21 million, there's only enough, if evenly spread out through everyone, for everyone to have 0.002625 Bitcoin. Couple that with the doubling demand I just showed you, and the stage is set for massive, massive opportunity over the coming years. Bitcoin is functioning now as money, and we can see this because the Lightning Network is 1,000 times cheaper than MasterCard or Visa. And speaking of Lightning, Google Cloud partnered with Voltage, which is a Bitcoin Lightning infrastructure specialist, meaning Google can now use Voltage as their outsourced Bitcoin and Lightning team. I wonder how long before Google follows in the footsteps of Tesla and MicroStrategy and starts to allocate some Bitcoin to its corporate treasury. BlackRock continue to sound the alarm. They continue to try to reel in people with headlines such as this: ETF approval could inject $30 trillion into the Bitcoin market. This would give it roughly a 3x the market cap of gold, and by my rough calculations should put us in the low single digit millions per Bitcoin. And speaking of BlackRock and ETFs, check this out. Look, we get the SEC decision on BlackRock, Fidelity, Bitwise, and VanEck, right? Just before the halving, March of 2024, just before this halving is due. So I want to start by asking a couple of questions here. If we're really going to do what the majority of people think, standard 4-year cycle repeat, meaning we're probably going to do some kind of basing here, get to the halving, they launch the ETF, and then we go full bore bullish, right? This is what I believe the consensus in the market is. And I just want to pause here and ask you a couple of things. Do you really think, number one, that BlackRock and Fidelity and Bitwise, they're going to launch these ETFs and let a bunch of people jump in here and ride and profit from this Bitcoin cycle? Or do you think that it's more likely that we're going to see these big boys down here all push the price of Bitcoin up massively to new all-time highs into the halving? And then as they launch this, we perhaps get a little pop-up followed by major distribution using the ETF, which means all of these big boys would have likely accumulated in this range down here and then be distributing it via their ETFs on the masses that are completely brainwashed into thinking the halving is the only factor that drives bull runs for Bitcoin. Is this more likely? Because in my mind, this has been more likely the whole way through this cycle. And having just seen and just found out that all of these ETF decisions get approved here, right before the halving, to me, this just reinforces my belief that we are going to see this huge blow off top move, followed by a distribution, and they use the ETF to distribute on the masses. That's how I see it. Now, it doesn't mean, of course, that we couldn't have some super cycle that goes up here and then blows off with the ETF. Maybe that's coming, but I just think that'd be too easy to have too many people make money. We'll know pretty soon, right? Because if we don't start to melt up, then we are going to base in here. When we base in here, then I would be worried that this ETF is going to be used as a price suppression tool, and we're going to see this. So I'd like to see this thing move up. Let me know in the comments what you think. I know a lot of people are just completely stuck in their way of thinking that we have to do this, but the market has not proved that yet. And particularly if we continue to set new highs, which I believe is coming shortly, then to my mind, this whole idea of a blow off top new all-time highs this year, followed by a distribution catalyzed by the ETF, seems to be the most logical to me. So as ever, one day at a time, open to all outcomes. But if you're championing this idea of the halving driving a bull market, then this thing really needs to chop around in this range, not break out to the upside in the near future. So despite trading at 30K, Bitcoin has the same relative value opportunity today as in Q4 of 2016. And so if we take a look here, this suggests that this opportunity that sat right before our very eyes on this very day is akin to all the way back here in 2016. The stars are aligning as far as I can tell. A lot of people I know, I've had a lot of people message me and say, I don't think Bitcoin's going to do anything. I hope I'm wrong, but Bitcoin just seems to be stalled out. Bitcoin seems to want new lows. And I think we're still in this position where the 10 or the 14K crew that got locked out here were forced to doubt themselves here, were forced to doubt themselves here. I still think max pain for all of these people is this. That's what I think, personally. Bitcoin is now currently in the tightest daily Bollinger Bands since early January. We have a massive pinch forming right here. As you can see, the Bollinger Bands are squeezing. Whenever we get a squeeze in Bollinger Bands, this always pinches before an expansion. So the question is it going to expand to the downside or to the upside? That is anybody's guess. Given that we are in a bull market, given that we have left the 4-year cycle low behind us, my primary expectation is that this move is going to be to the upside. So hopping into some charts, when this 10-year yield broke out, I was pointing at this and saying this could easily pressure risk right here. But since then, we are currently rolling back over. Now, this could, of course, morph into a breakout, retest, resumption. And if that's the case, then we could see pressure on the equity markets and risk assets in the short to medium term. Has this largely been priced in already? As you can see, 92.4% chance of seeing a 25 basis point hike at the end of this month. So maybe that's what's going on. We need to keep an eye on this. If we are right about the weekly cycle low showing up in the not too distant future, then it's kind of reasonable to expect this to continue up a bit higher, I would have thought. But of course, invalidation for this is if we continue to close candles below this downward sloping purple resistance line, then that tells us this was just a failed breakout or a fake out or a bull trap, and we're going to be rolling over. So keeping an eye on this. For now, though, that's more of an encouraging look than it would have been if we were still trending up. Here's the dollar index, the DXY. Finally, we've lost this range. We knew this day was coming, especially if you've been watching this channel. Ever since the top here, we've been targeting the mid-90s. And now finally, it seems like we might have a shot at seeing something like this down to the mid-90s. So the resumption of the downtrend is well in play. We've had plenty of rejection at resistance. And this is what I've been waiting for some time. I think I've been calling for this move since back in this neighborhood, I think. And then when we came down, I said, fine, we've probably got to go up for a bit and then roll over. But finally, all these weeks later, it's happening. So this is great to see. And this is certainly not a concern. I was saying not too long ago that one concerning look that we could get is this. And clearly that hasn't happened for the dollar. So hopefully there's room to run in risk. Gold currently benefiting, as I said, flip long on gold. Not much more to say about that, apart from this cycle low, I hope now will form higher up. Also, it should be no surprise to you that we added a silver long on the breakout yesterday. Again, I've been calling this out for a very long time. I did think that we had to be open to seeing a rollover, as I said over and over again, but I also kept saying, if we can break out and get some follow through, then that, of course, would be a long from me. The trigger for the long, yesterday I was saying I just wanted to see a bit more follow through. The trigger for the long was taking out the prior day's high. And so once we get in here, then you just have to respect the breakout. So currently long gold and silver, again, should be no surprise to you if you've been following the channel. Still pushing the S&P long, as you can see. Stop has been moved up to the dash line. So there's not much more to say about this apart from long and strong continue to push, and we'll see what the market can give. I also added a NASDAQ long yesterday. Now, we got to be open to seeing this play out from higher up. I think that would probably be more likely from here. I also think that we've got to be open to seeing some kind of gap fill because we have left a gap here. So we'll see about that. Am I very confident in this position? No, not really. But this was a close above the local high on a daily closing basis. So long and strong, and we'll see what the market can give. Another position I've been calling out for a while is this long Dow trade on a break above this range. So right around there, is this going to come today? If it does, I still think we've got to be open to seeing a more short-term sort of pop-up and then that drop into the cycle low before we can go. But as ever, if the market's going to break out, then I just want to be on the right side. I want to be respecting that breakout. So getting ready to go long the Dow. VIX still getting smashed, so not really a surprise, is it? Probably going to continue to see more and more of this until we finally get to the all-time highs in the stock market. And then I think it's time to see a massive VIX explosion. But that is some way off for the moment, so I'm not going to worry about this. But when we get nearer the time, I will start to call this out and let you know exactly how I see it. Tesla still holding its upward sloping support line. So all the while we're above that, we'll keep pushing the trade. Apple as well seems to be trying to break out, seems to be holding its support. So happy days. Hopefully this can continue to resume. If we can get above these highs, then I think we can choke stops up even more, probably underneath this low. XRP, been a while since I covered XRP, but here it is, still hanging around doing absolutely nothing. Ethereum still kind of hanging around break even, doing absolutely nothing. And Bitcoin still sideways, isn't it? I think we must be getting close I think we must be getting close to a decision, whether this is going to be a horrible Bart Simpson pattern and go, or whether this is, I think my primary expectation for this is that we are going to see it break out. So getting ready to go long, need to see a daily close above here, but I would think we're getting right around in the timing window now where we should see it. I also think this count here for the cycles might be slightly broken, so I'm open to having to readjust this, but for now it's not really clear from my perspective, so I'm just going to see what happens and look for breakouts above this level, but I do believe they're probably coming. Some of the reason I believe they're coming is the price action we're seeing out of the crypto-related equities. So Coinbase, still long, still strong, see what can happen. Absolutely natural to have a reaction here, given that it was resistant so many times, but some kind of chop around here and then break out. And I think, again, we can add a position on a breakout, move the stop up to somewhere up in this neighborhood and go again, just like we've done with, for example, MicroStrategy, which also continues to rocket higher. So happy days there. Riot on an absolute tear. Again, happy days there. And Marathon as well on an absolute tear. So pullbacks, in my mind, are for buying in all four of these, but there's no clear entries just yet. So we'll play it a bit more patient here. Overall, pretty happy with the exposure. And the members only setups, I think 3 out of 4 of those look absolutely wonderful now. They were looking a little bit shaky into CPI, but 3 out of 4 of those positions are doing really well. So one of them seems to be loading a breakout as of today. So happy days there. And if we can just get a few more green candles, then I'm sure that will more than cover the monthly membership fees. So trade safe out there. Remember, we'll have to take it one day at a time. Like I said, there's room for upside, isn't there? There's certainly room for upside, but we need to keep that contextual awareness and not get too FOMO and too trigger happy into these highs, because we do know that weekly cycle low is going to show up. Although, as I keep saying over and over again, there's nothing to say that it won't show up much higher than we currently expecting. So as ever, one day at a time, no emotions, no bias, ready to pivot if the market tells us to. And if not, then we'll just keep pushing some positions. Once we eventually get through the next few weeks, once we eventually find that weekly cycle low, we're just going to be in a situation that we haven't been in since the lows of October. And that is where I think we can just go long pretty much anything. I think we're going to be able to go long almost anything, and it's going to work for at least 4, 5, 6 weeks. And that's assuming that we don't make all-time highs. That's assuming we just roll over and die from there. So assuming the worst case scenario, we could pretty much go long everything out of that weekly cycle low and profit for a few weeks. And in the best case scenario, we can go long pretty much everything down there and ride this rally to fresh all-time highs on a big blow off top. So the last piece of the puzzle is just, come on, Bitcoin, do something, right? That's what we need. We just need Bitcoin to wake up. But remember, Bitcoin does things pretty quickly. If we hop back into this chart, look, Bitcoin went in 3 candles from 24K to 31K. So in 4 more candles, we could be at 40K, no problem. Don't underestimate Bitcoin's ability to pump. It certainly can do it. So let's see what happens. In the meantime, I'm your boy Camel. I wish you all the best. Take care from me. Cheers. Bye.